Hey, welcome back to Family Investment. Today, in this video, week 12, 2025, market's going a bit. Let's chill out, take a break. Where are we going next? Because we want to speak about correction or recession. Over the weekend, I've been listening to a lot of podcasts, and there's a lot of tug of war debate. Anybody who is in the Donald Trump camp or Elon or even neutral are thinking this is just a technical correction. Yeah, because we are down 10%. But folks who dislike this two individual think they are here to cause trouble. Very, very biased view, think that a recession is looming. All the war tariff and all the I hate Tesla camp thinking a recession is looming and it's just a matter of time before it kicks off. So, what as retail investors should we be focusing on? Do you really care? Do you really care? Me, investors, I only focus one thing: money. Okay, when money means opportunity. Okay, I don't care who I cite, but obviously, folks from the States, from the US, everybody's entitled. We live in a free world just now, but the opportunity persists. The 10% drawdown from last week, Thursday, 10%. But did you check your portfolio? Is your portfolio really down 10%? If you said it's less than 10%, I believe you if you hold lots of VOO or Berkshire Hathaway of more than 75%. If you hold that two stocks more than 75%, fine. You really protected, defended your portfolio. But the real question is, 10%, most of everybody's portfolio last week was down 20%. If we actually go into a deeper correction, then we are talking about a 40% drawdown, or if you go into recession, then we are actually close to 50 or 60% wipe out of your capital, regardless of what you invest. Imagine you invest $1 million of hard-earned in the last 20 years. If you did not protect, and we actually do around 30% in the next few months, we will be down half the amount. So think about who you support politically. Does it matter? No, it's your portfolio management that matters. So this is why we need to protect our portfolio. That's key. So now we are 10%. Now we're going back about 9-8%. We seem to be, it's over. It's so fine. Nothing's going to happen. Or what if it goes deeper? There's something you need to think about. That was the warning call going forward. So let's go into the chart. So I called the death cross, but the bottom is in. Okay, bottom is in. It looks like it might be over. Same for the NDX, the Nasdaq, death cross, but it looks like the bottom is in technically from where we are. You look at the VIX, it seems to be coming down as well. And if you look at the long term, it seems to be, it's coming down. But if this is a fake bull jump up, I hope we do not go into the long term. Instead of a climax pump, we are looking at the long term hovering round about the above 20 zone. That's what I fear. If we're going to recession, this is going to drag out even longer. But I hope we don't. I hope this is just the end. But I'll tell you my opinion right at the end. Okay, regardless, I've said this last week and I'll say it again. Don't ruin your emergency fund. Emergency fund is only there for emergency purposes. De-risk high valuation, keep up for qualities, and play the long game. I repeat the same thing. But today, in this segment, to you family investors on my YouTube channel, I would like to bring in 3 key stocks of interest, which you should be looking at for the long-term game. Let me do analysis. First up is Caterpillar. Buy triggered, just below 350 valuation, but then again, Caterpillar is one high dividend paying stocks. A lot of hedge funds, a lot of pension funds hold these great quality companies. Growing at 4% slow, but the risk level is slow. Performance, come on, it's stable. They sell the same amount of equipment every year. They're not there to mass sell lots of burgers like McDonald's. Recommendation, because of the buy trigger zone, it's gone up to 75% as a staple stock. Very, very rare. Buy value is up, very good value. Market expectation is about 5.84. We're now 4% here. So Caterpillar, if you're looking for stable stock, it's great. It's slow, it's boring. That's what it's supposed to do. Pay your dividends, and then when on the rough times, it's great. The only reason why this stock is down is because people think that Caterpillar is not doing as well on their machineries. But then Caterpillar supply a lot of gas to power, a lot of turbines, a lot of equipment that will help data center grow. I think the information they supplied just now is not very right. I think because of this value stocks drawdown, Caterpillar has been impacted. Long term, I thumbs up this as a B+. Next, Adobe also injured. Adobe is currently like the the best software value stock to date. 441, my buy trigger valuation should be 490. We're around about the 400 zone. Growth is 13%, which is great for Adobe. And loads of analysts out there are saying their growth is from 9%. But when I look at the last 3 years and the forward 5 years, 8 to 9 years in total, it's 13%. Severely undervalued just now. You don't like it, but in terms of valuation, it's calling low risk for such a mature growth stock. Performance recommendation is starting to go green. Value is at 100. Market expectation is just slightly on the red zone. So if you want to take the risk on a mature growth stock, Adobe is the one. But then my favorite one to buy on the dip at this situation to de-risk is Amazon A+. I might have mentioned in a previous video, but I want to reiterate again. 195 so far off the buy trigger, or 211. Buy value is max. Risk level is a green zone. Performance is at green. Recommendation 95. Market expectation almost green. I think this is the winner going forward for in a climate where we're uncertain whether we're gonna spike up, spike down. Amazon is there to forecast for growth going forward at a staggering of 31%. Okay, so now the final question is, Alex, do you think this is a correction or recession? You've spoken a lot lately. As for now, technically it looks more like a correction. We look like on a technical bounce up. To break away, no. But on a stability sideways market, I hope then we are in the correction territory. Okay, so my 7 minutes is up. I hope you find this useful. If you want to get more of the buy trigger, always go to alexco.me. If not, sign up to my newsletter. Or if not, just see me here on YouTube. I hope you enjoyed it. I hope you find it useful. Hope to see you guys next time again. See you later.